Good morning and welcome to this Baldwin CPA's webinar. Before we get started, I'd like to review a couple of housekeeping items. First, this is a listen-only webcast. There is a chat button at the bottom of your screen where you can submit questions. We will try to get to as many questions as possible during this hour. However, following this webcast, we will be publishing the slides, handouts, and a Q&A to our website. You will receive an email with a link to the page. Welcome to the Baldwin CPA's webinar, Paycheck Protection Program Forgiveness Update. The Small Business Administration, in consultation with the U.S. Treasury, has made updates to the forgiveness process of the Paycheck Protection Program and the applications for forgiveness. These new guidelines give more flexibility to have the loan forgiven and make the application process easier for those who qualify. They have also released a questionnaire to borrowers who received loans that exceeded $2 million. During this webinar, we will walk you through the new updates, required calculations, and best practices to maximize the opportunity to have your Paycheck Protection Program loan forgiven, along with some updates given by the Governor of Kentucky. Our presenters today are Lisa Devon Foley, CPA, CGMA, and accountant Matthew McKirahan. I will now pass the presentation over to them.
Thank you. We appreciate that intro, and we're glad to be back. I know, Matt, it's been a couple months, right? But here we are.
It sure has.
Yeah, Matt and I were talking yesterday, I believe. It's like hard to believe we've been doing these webinars since April, and here it is December, and it's still a very pressing topic. It's been a most trying year, and we've had a lot of great feedback from the webinars, so we wanted to get back on here. We feel like the dust has settled on forgiveness for the most part. There's a few things we'll talk about that are outstanding, but as a firm, we have started the forgiveness process and hope to have all the clients we're helping have those done mid-January. Just kind of as a note to everybody that's on here, and we're going to be helping you. That's kind of our timeline. We've got 300 or 400 of these to work through, and we're making progress. It just takes a little bit of time. So we wanted to just give a good overview of the forgiveness process today, and a few things that are coming down the pike, we believe, and we'll have some room for questions. As we alluded to all along in these 8 months, is we did think they would make this easier, and they have. So we are glad to report that. So we just wanted to get everybody back on here and share that knowledge, and that way you can plan for your businesses accordingly. So anything you want to add to that, Matt, before we get started?
No, I look forward to just kind of helping people understand kind of the regulations and how they have smoothed this process out, and really give them a good look at the banks and kind of what the banks and the lenders are wanting, and because they're going to have a role in this to be able to prove some of the calculations and the numbers that go on these applications. And so they've been kind of dealt with a pretty strict hand. So just being able to help them out, each bank is different. And we'll kind of talk about that as we go.
All right, so just as an overview on filing requirements, you can apply for your forgiveness once you've used all your loan proceeds that you're requesting forgiveness for, or your 10 months, or so you have the deadline is, and I think that's a big question we're getting right now, is once your covered period is over and you've used the funds, you have 10 months from the end of that covered period to file with your bank for forgiveness. So we still have a big cushion of time, because most people are going to be using the 24-week. We've had some people that choose the 8, and we'll talk a little bit about that, but you've got a plenty amount of time to get that done. So that's why I know the banks, to be honest, are sending emails and putting a lot of pressure on people to get this started, because they've got a lot to work through as well. But it is a 10-month deadline on that. So we've got plenty of time. Selfishly, from our standpoint, we're trying to get it done before tax season hits next year. And everybody wants to get this off their books and move on from it. So that is our goal as well. But it is a 10-month deadline on that. And then once you submit your application to the bank, the lender actually has 60 days to push that on up to the SBA. At this point, I've not seen any lenders really taking that long to do that. It's been moving pretty well. And then on the flip side, the SBA has 90 days to review it and grant the forgiveness. So it could be a very extended amount of time between the lender and the SBA. There's 150 days there that they could spend, but we are not seeing that at this point. Matt, we've had several already come back. So I think the banks are trying to upload them, and the turnaround time on both the lender side and the SBA side has been really pretty good at this point.
Yeah, no, I would agree. I think from a lender standpoint, they're usually taking probably 5 to 10 business days, and 10's probably on the long end. And then the SBA, which I'm very surprised, they've only been taking probably 7 to 14 days. So they're definitely trying to push these through and get them forgiven and move along in the process. The banks, the lenders do have some reporting requirements in terms of communications to the client about the process once you actually submit your application. So, and we actually have a couple examples, one to show you here coming up. But yeah, no, it's been moving very, very smoothly for sure.
And just to add on, the reason it's moving smoothly is to be honest, the banks want these low interest loans off their books, right? The sooner they can get those off their books, get reimbursed by the SBA, then they can loan that money out and on normal credit rates and different things like that. So the bank does have big incentive to get those moving. All right, so there are what became easier and how they kind of streamlined this process is the SBA created 3 different types of applications. The first one being the 3508S, and this is for any loans under $50,000. This is just a very more simple form and short form. And Matt's going to walk us through some of the details that go on each of those. But we had hoped, and our lobby group had hoped that number would be 150,000, but they went with the 50,000. So they really lowered that quite a bit on that threshold. But a lot of people, anybody under 50,000, you do have a simple form to use, and the burden is a lot less on that. Secondly, there's the EZ form. Again, it's pretty easy to comply with, but this is loans that don't have any wage or FTE reductions, and Matt will talk a little bit about that as we move on. But the FTE reduction has been the center of all of this from the beginning on how we were going to maneuver around that or work through that. And what they came along and what has made the easy form easier to use and easier to get your forgiveness is if you had an executive order or a closure that affected your business in some way, then really the FTE requirements are thrown out. And Matt will have some examples of some businesses that we've been able to use that for and make that process a little bit easier. So if you can't fall into the S or the EZ form, you're left with the long form, which if you've been part of the webinar process from the beginning, when we started talking about this, all we knew was the long form. So we were going through complex FTE calculations and things like that. And if you can't fit category 1 and 2 on this screen, then you're going to end up in that long form with some more work to do for sure. All right, and I'm going to let Matt take us through. We've got some examples and the detail work on some of the different forms.
Thanks, Lisa. Just wanted to show everybody a quick look and a quick peek at what the actual form for 3508S, the short form with the under $50,000 loans would look like. And so it is actually a 1-page form. So this is the top half. And I want to kind of show you this because mainly this looks very familiar to you all, or should. It actually looks very similar to the application that we did 6-7 months ago. And so it's very similar to all the information you're going to put on there. And so from an easier standpoint, this is what they have simplified. Basically, you're just going to have your loan numbers for the SBA, and then you're going to have your lender loan numbers. You're going to want to make sure you obviously have your loan amount, your disbursement date, which is important. Remember that is also when you actually receive the funds and was dispersed from the lender. And then you're going to put employees at time of loan and employees at time of forgiveness application. And so just remember that the SBA defines employees a little differently. So when you see employees there, it's not necessarily head count. You're looking for full-time equivalents as well. So just keep that in mind. And then we'll just, as you can see there, the forgiveness amount, they're only going to ask for the forgiveness amount. So if you've had, say your loan was $50,000 even, and we've got payroll to cover that $50,000, then obviously we'll have to provide the lender that information so they can verify that we've had $50,000 of wages. But we're just going to go ahead and drop in because we've met all of our requirements, that $50,000 for our forgiveness amount. And then the bottom half of this, I didn't want to include it on here, it would kind of just take up a bunch of space, but the bottom half of this one-page form is the certifications. And you can remember back on the application that there were certifications that we would use it appropriately, that it was in need, and things of that nature. And so there are some more certifications that's going to be on this simplified S form for loans under $50,000. And so you would basically go through and initial those and then sign and date. And this would be a one-page form that you would send to your lender along with your verification of payroll if you're just using payroll. So just kind of wanted to show you that. We know that this is obviously a much easier requirement for a form. And obviously we know that there are loans under 50,000 out there. So I wanted to go ahead and put this out in front of you all. So talking a little bit more about the details for the form 3508S, like I said, eligibility, any borrower with loans $50,000 and under. And so there are some documentation requirements. Even though the application itself is a one-page, you still have to provide supporting documentation to the lenders because, as I mentioned earlier, the lenders have been charged with kind of confirming your amounts before they send it to the SBA. And so they're going to be looking at some specific things. And so if we also have learned some best practices, and I'll pause here for a moment because I think it's important to mention we've actually had a few of these gone through the entire process, a pretty good handful now. And so we have learned some best practices that we kind of wanted to just share with you. And with that being said, one of the best practices is to use payroll only. And so when I say use payroll only, when we're allowed to elect the 8-week or the 24-week, it's very simple to go ahead and elect the 24-week because we're going to be able to use all of gross payroll. And why I mentioned as a best practice is because now you're not going to have to support all those other expenses because the SBA has come back, and even from our experience from the lenders, they have pushed back, and you really have to get detailed on things such as utilities. Not only do you have to provide the invoice and the canceled check of paying the utility during the cover period, but then you have to go back before even COVID all started in March and provide some examples of, well, yeah, that utility was in place before COVID started. So basically verifying the existence of the utility payment before this period started. And so that comes along and actually applies to each of those expense items. So not only utilities, but you're talking about mortgage interest, you're talking about rent, things of that nature. And then when you get down to like health insurance, which can be part of your payroll costs, 401k contributions, things of that nature, all of that has to be supported not only for your covered period, but also before the cover period started. So you're kind of having to do twofold. So the best way around that is to use gross payroll if you have enough over the 24-week period. And I want to make sure I say one comment. I actually have done an application, and there was the thought process of if we elect the 24 weeks, we can just go ahead and use 12 weeks out of the 24 and just put 12 weeks of payroll on the application itself. Well, that's actually not a good thing to do. We have gotten some guidance and feedback from the SBA and lenders that go ahead and put all 24 weeks of payroll on there. There's two real reasons for that. One is it's easier to back up and support if you're looking at quarterly tax payments in terms of 941s or payroll reports. It's easier to kind of tie those out to a specific end date. And then the other reason is due to the fact, excuse me, due to the fact that you can calculate some FTEs overlooking for the 941s. And so all this leads back to basically easing the process of the lenders and the SBA when they go to review and be able to tie out those reports. And so coming back to the 3508S form, some documentation requirements. If you're going to use payroll, there's kind of two requirements here. You can use payroll reports from a third-party processor, And if it is from a third-party processor, they're going to take that because obviously it's outside of the organization. But if you're doing internal payroll reports, you're going to have to provide those payroll reports along with the copies of the bank statements that the payroll was dispersed from. So just kind of note that there, that if you're doing internal payroll and you're going to support that with payroll reports from, say, QuickBooks, things of that nature internally, make sure you add those bank statements so they can see that coming out just to verify that those payments were made. You're also going to put your payroll tax returns. You're going to want for sure the second and third quarter, because if you're electing those 24 weeks, those are going to be the quarters that apply. But then you're also going to want to go ahead and send your first quarter as well, because like I mentioned, for all the expenses, you're going to have to verify existence before your covered period actually started. So you're going to want to go ahead and do first, second, and third quarter for 941s and your state unemployment forms. One good thing is you do not need any document on the FTE during the covered period or look back periods. That's one of the simplified things they had done with this 3508S form. And then if you are a Schedule C or a 1099, you guys obviously applied for the PPP funds on the front end. And so if that is the case, you'll just have to show basically your 1099 from 2019 or your Schedule C from 2019. Obviously 2020 is quickly ending here, but we don't have tax returns prepared yet for 2020. So all they're going to really need is verify the existence of your Schedule C or your 1099 in 2019. Wanted to talk a little bit about the form 3508EZ form. This has become pretty much the primary form I see everyone using, and everyone, if you can qualify for it. So eligibility here, any borrower with a PPP loan that did not reduce FTEs and did not reduce employee wages more than 25%. So that is the first benchmark. So if there's kind of like two check boxes here. If you can meet that first checkbox, you would check the box, you would qualify for the EZ form, and off you go. But there's a second box that has really, for instance, we talk about examples that we've worked with, restaurants. The second box here, or any borrower who did not reduce wages more than 25% and was unable to operate during COVID, during the COVID period, March 1st through December 31st. And so that's where it come along. For instance, in the state of Kentucky, Governor Beshear has some executive orders that limited restaurants to only takeout. And so doing that limits your business in its entirety. And so you would be able to check that box very simply. And we've actually provided the executive order that you can get from the state's website. We have just printed that out, submitted it with the application on our EZ forms, and off we go. Haven't had any pushback with that whatsoever. And so just note that if you've had to change basically your business structure and how you're going forward and actually providing services or whatever your business entity is trying to do, if you've had to change due to requirements from the state, the CDC, things of that nature, just make sure we document those, and we'll be able to check that second box, which allows us to get away from some of those long calculations on the long form. Same requirements here. We're gonna have to have payroll reports from a third-party processor. If you do have a third-party processor, or internal payroll reports and bank statements. Same thing here, that you're going to have to provide the lenders first, second, third quarter 941s and unemployment forms. And then you do need to go ahead and provide an FTE calculation for the covered period, as well as one look back period. You can just select one. Just a reminder, the look back period, the first one is you can look back to January 1st, 2020 through February 29th, 2020, or you can go back and actually look at the same time period in 2019 during your covered period, which could be anywhere from your origination date, so say March 31st all the way up to July 28th if that need be. Those will be your look back periods. And then kind of just going on with the full form here, the 3508 full form. This is kind of everyone else, is kind of the all-in bucket at the end. And those same documentation requirements are going to apply. The one thing here is you're going to really have to look at your FTEs. I know we've kind of harped on that a lot, but those FTE calculations are going to play a big role in how much can be forgiven. One thing I wanted to note here, if you were to actually go look at the long form, the way the calculation works is it starts with your expenses. So basically you'll list out your payroll expenses, your utilities, your mortgage interest. But say we're just using payroll, and you go ahead and elect 24 weeks and actually add all 24 weeks of payroll here. The way the reduction works for the FTE calculation, so say we went from 25 employees and we cut that in half, and on the SBA terms, we had 12 and a half employees. So we have a 50% reduction to our employees. But if we've got enough payroll on that top line there, say 50% in excess of what we needed, when we reduce our payroll expenses by that 50%, we could still get the entire loan forgiven. And so that's kind of a best practice that we've found, that go ahead and put that 24 weeks of payroll on that first line, because even though it's going to be a number probably way above what we actually need to get forgiven, if there is any hiccups with the FTE calculation, things of that nature, we should still have enough expenses to be able to apply for 100% forgiveness. So just wanted to mention that there. So like I had mentioned, some required payroll documentation. If you have third-party payroll reports, that's great. They usually have just kind of check the box there and they'll move on. Internal pay reports, we'll just make sure you send those bank statements. Payroll tax returns, go ahead and get your quarterly 941s and your state unemployment returns. And one thing I wanted to mention, banks might require copies of canceled checks when, for instance, if you're doing direct deposit, things of that nature. Not always on the bank statements are you going to be able to see individualized payments to employees. And so helping them try to tie that back to that bank statement just to prove that the expense was made, that's going to be important and kind of a key there. I wanted to touch a little bit, if you're going to go ahead and put some mortgage interest, some rent, lease payments, utility payments, things of that nature, I wanted to talk a little bit about what would be required. Mortgage interest, you're going to have to provide an amortization schedule. You're going to have to provide some canceled checks to show of the payments, and then you're going to have to go ahead and provide some canceled checks that show you were in existence before 2/15/20. And that's really just kind of the pain that comes along with these non-payroll costs. If you need to use them, we certainly can, and we can use those accordingly. It's just easier to prove the payroll than it is to prove all of these, because as you can see, just copy of canceled checks, lease agreements, they have to make sure that the lease agreement's dated, current. So things of that nature, utility payments have to make sure existence before February, things of that nature. Just going to cause a lot of headache in terms of trying to prove these expenses were in existence before we actually took this loan. So now I've talked about a little bit about kind of what's been required, some best practices. I wanted to show you guys an actual letter that you'll receive from the SBA that once you've been approved by the lender and have moved on to the SBA review and the SBA has finished their review, they will notify the lender that it has been forgiven in full. And so you should receive two letters. One is the lender itself is required within 10 days of receiving that notice from the SBA to send you a letter, and it can be different amongst the lenders. But basically it'll say, here was the amount of your principal for your loan. Here's the interest that was charged throughout your covered period since you took the loan. And here's the payment the SBA has sent, which will cover that principal and the interest that has accrued. So just remember to note that the interest is also being paid by the SBA that has been accrued there. So, and then sometime later, maybe 7 to 10 business days, it's been like, you'll receive this actually notice of Payment Protection Program forgiveness payment from the SBA, kind of confirming what the lender has already sent you. And basically it says the same thing. It's got your loan approval dates, your loan disbursement amounts, and then obviously your forgiveness that was requested. Just a note there, remember the economic injury disaster loan advanced is subtracted from your forgiveness. So just note that it's on the forgiveness application itself. I know we've had some questions dealing with the EIDL loans. And so if you've got a full EIDL loan that is not part of the advanced, it will not be subtracted from your forgiveness. It's only the advanced part that is going to be subtracted. Just wanted to throw that note in there. But yeah, this is a letter that you'll get from the SBA saying it's been approved, and then that the loan has been paid for, and then that'll come off the bank's books and then can come off your books as well.
It's probably worth mentioning, Matt, for those on your financial statement, this is setting as a liability on your financial statements. And once you get this forgiveness letter and this date, that is when you would kick it to income on your financial statements.
Thanks, Lisa. Wanted to move on here and touch quickly on this. This came out about a month and a half ago. It has obviously created some circulations of some not so good talk amongst AICPA members, things of that nature, and some pushback. So if you have had to have a loan that's over $2 million, or due to affiliated entities taking multiple PPP loans and over $2 million, you're going to be required to do what's called this Form 2509, which is a loan necessity questionnaire. And this is really going to go back and help the SBA reviewers to see if you, in good faith, those good faith certifications that we made back on the loan application. And so so we're always going to go over 2 million. If you're affiliated companies and have over 2 million aggregated together, you'll be required to do this. It's going to be, first you go ahead and apply for forgiveness. We're actually working through one of these right now. So you apply for forgiveness using the previous forms we've mentioned. And then upon them reviewing the SBA, they'll send a notice to the bank stating, hey, can you have the borrower go ahead and fill out the loan necessity questionnaire? And then we'll have 10 days to fill that out. And so there's some detailed information on here. I'm going to just touch on some highlights of it. But the purpose of the form, it'll be used by the SBA loan reviewers to evaluate that good faith certification that was made on the initial application. And remember, if you talk about that word economic uncertainty, that was what we needed to be able to make sure the loan was necessary to go ahead and apply for. So it's really just trying to get to that and make sure that they can review that appropriately. So this has become a little bit of a headache in terms of clients who have this that they're going to have to deal with, because there are some detailed information that we're going to have to provide. So talking about some of that detailed information, there's kind of two sections. There's a business activity section, and it's going to require you to go ahead and look back at your second quarter of 2020 gross revenue and compare it to your second quarter of 2019 gross revenue. And so you're going to have to do some comparisons. And it's actually a questionnaire. It's 8 pages in length, and we're just going to have to drop numbers in there. But you're going to have to go back and look at some detailed items. And then you're going to have to say, has your entity been affected, excuse me, by COVID requirements from federal or local governments? Like I said, if you're having to deal with an executive order, for instance, like the restaurants are in the state of Kentucky, then you'll have to put that information on there. And then there's also the liquidity assessment section. And so you're going to have to go back and go ahead and look at the date you applied for the loan. What was your cash and cash equivalents as of your PPP loan application date? You're going to have to go ahead and put that information on there. If you've got high level earning employees on payroll, did you pay them during this time period? Mainly that $250,000 mark is if you have an employee that annualized wages is over $250,000, that's who's going to qualify, that you have to put their earnings on here and how much they paid them on here. And so then you're going to have to look at the ownership structure. Was there a possibility that you could go to a related entity and get a loan, things of that nature? You're going to have to look at, have you have access to other forms of debt, line of credit? Could you have gone to a lender and gotten a normal loan? And then obviously publicly traded companies have some additional requirements talking about some IPOs and things of that nature that would go along with this 3509 form. So I know it's kind of a thing that has come up all of a sudden. I know there's definitely been some pushback of this is not what it was intended to do. And that economic uncertainty is going to kind of be key.
And I do think the last AICPA call I was on, Matt, the AICPA is still pushing back very, very hard on this. And this form's really not readily available for everybody to get their hands on. It has to come through the lender. There's been a lot of, I think a lot of the pushback has been comparing second quarter to second quarter maybe doesn't cover the right period.
Correct.
Of things. So, this is kind of one of those areas. I think there's still a little bit of uncertainty, and there may be some more developments in this area because there's been a ton of pushback on this.
I wanted to spend a little bit of time. We're going to move from PPP type questions and information here. I wanted to just put a little plug in here. This was actually released last week. I think it was right before, maybe a week ago, that Governor Beshear had mentioned that he was going to allocate $40 million to this Kentucky Food and Beverage Relief Fund. We all know that the Executive Order 2020-968 had restaurants go back to just takeout and things of that nature, no in-person dining. And so he allocated some of the money that had come from the federal government on the front end back in March. He went ahead and allocated $40 million. So a restaurant or a bar, for instance, can go ahead and get up to a $10,000 reimbursable grant, and we just have to approve those expenses. I'm not going to spend too much time on that, but if you do have, if you think you're going to be able to require for this, we're going to want to go ahead and try to do that quickly. I actually sat on a phone call webinar. I believe it was late Tuesday afternoon, and was talking. And so it went live on November 30th. So that was 4 days ago. And there was already, as of the Tuesday afternoon, 2,300 applicants that had already submitted. Now, one thing that was key to note that they had said was the 2,300 that had already applied, they did on their own. There are going to be some requirements here. It's relatively easy in nature. We just have to make sure we've got our T's, or dot our I's and cross our T's in terms of what we're providing, because one of the things that's going to be interesting, and one of the best practices for this would be to go ahead and say, well, payroll, I'm going to have $10,000 worth of payroll in this time period from our COVID period back in, I think it's 3/15 is the start date, all the way through December 31st, 2020. I'm going to have $10,000 worth of payroll, but there is stipulations there. If you're using payroll to get forgiven on the PPP loan forgiveness, that cannot be used to be a reimbursable expense over here for this Kentucky Food and Beverage Relief Fund. So that's something important to note, that we'll have to make sure our dates of what payroll reports we're using to be able to get these reimbursable expenses, to be able to get that $10,000 reimbursable again. If you have multiple entities, you can get up to a maximum of $20,000. So basically 10, and then another 10 for another entity, but you're going to be capped at that 20,000. So that's the website there. They're now accepting applications. We can certainly help with those. The deadline is December 18, 2020. We kind of spoke with the head individual over that in a webinar, and they were basically, they had some best practices. So do not wait to apply. Make sure you read the instructions. Make sure you do your due diligence on supporting documentations. Make sure you're looking at those eligible expenses. There's no real, the eligible expenses are much like the expenses in the PPP loan that we're basically using. So anything of mortgage interest, rent, utilities, things of that nature. If you've had COVID-19 expenses, things such as face masks, hand sanitizer, all of those can be included. But when you start going down to those supplies and things of that nature, the support you're going to have to provide for those is pretty daunting. So just be aware that payroll probably is the best practice here as well. We just have to make sure it's not the payroll that we're using to get forgiven for the PPP loan. So didn't want to spend too much time on that, but just want to let everybody know that that's there, and we can certainly help with that if that's something that's needed. With that, I'm going to go ahead and turn it back over to Lisa. She's going to talk about some things that we know and what maybe be in the future.
Yeah, so PPP2, right? There's a lot of talk about it, and it looks like we're closer than we have been. I think Senator McConnell last night even talked about that they're really back and closer than they have been. What we do know at this point is that it's going to be most likely targeted at certain industries. So it's going to be, you're probably going to have to prove your industry. Of course, restaurants, hospitality. There's going to be some different ones that will probably be in there as well. But those are the ones that come, front of mind right now that are really struggling. So it is going to be toward targeted industries, and they are, what the AICPA has been telling us is it looks like it's going to be, you have to also prove that you've had a 25 to 35% revenue reduction. I don't think they've decided that number final yet, but those are the numbers that have been thrown out there, and that's kind of the range they'll be looking at. So I think it will be a much more, it's going to be much more restricted, whereas in April we were dealing with really everybody qualified because of economic uncertainty, and this one's just got a little bit, going to have a lot more teeth in it to making sure it's going to the people that have suffered the most through this. The AICPA lobbyist call yesterday said that we may have this rolled out as soon as next Friday. So a week from today, we may be having to start dealing with this and figuring out the application process for this as well. So stay tuned. That's something we just wanted to give you what we know at this point. And things in Washington are a mess right now. So hopefully they can come together and come up with a plan that will help those that are still suffering through the pandemic.
One thing to note there, Lisa, I think I saw last night as well, it's a relatively large amount they're going to throw back in here. I think if I remember correctly, the article I saw was up to 300 billion, which that's a pretty significant number to throw back into this round two, which is good. I think that'll definitely help those industries, the targeted industries, but also allow us to not have to feel too rushed on the application side to make sure we have to properly.
And that's a good point, because last time I know we were all rushing to get in because we just didn't know how long the money would last. And if you remember, the PPP closed out and had unused money. So that's something to kind of keep in mind. So I'm sure part of the reason they can make that number a little bit bigger is they had leftover funds from the first round to help with that. But yeah, I think it's going to be a much more restricted number of people. And it sounds like they're putting a good number out there. So it should be hopefully easily available to those that qualify.
Yeah.
One of the things that we've talked about for months now is the deductibility of the expenses that you paid with the PPP money. So the IRS actually a couple of weeks ago, and I know we had an email blast about it and shared it on social media. The IRS actually came out and clarified that if you use PPP funds that are going to be forgiven, those expenses are not deductible on your tax return. And that's the IRS rule regardless. They just came out and said, just kind of clarified it and said, yes, this is how the rule reads. So, just kind of keep that in mind. There definitely could be some tax planning that you want to think about before the end of the year, because it doesn't matter. There was a lot of discussion about whether if you waited and didn't apply for forgiveness until January, would that, make this not be the case? And they clarified no. If it's forgiven or forgivable, basically, those expenses are not deductible. So, essentially that makes your PPP money taxable. That's just the easy way to look at it. So I know I've talked with several clients that, really, if this holds, there's gonna be some big tax bills. And I had a client kind of say something, grumble back about it. And what I had to say to him was, if somebody's going to give you $100,000 and you end up paying $30,000 of it back in taxes, you'd probably do that all day, right? You still had $70,000 you didn't have. So, I don't know. Congress has been very adamant that this was not their intention. And the AICPA lobbyist group keeps telling us that there is a high probability that this will be fixed. And my understanding is that the fix is actually in the PPP2 bill that we're talking about for next Friday, that the fix is in there. That is going to say that it is deductible. We have ran into this situation with some clients that were June 30th year ends or September 30th year ends, who had to make a call on how to treat this on their tax returns already. So the IRS did say that if something changes, obviously you can go back and amend and fix it either way with however that works. But the AICPA is working super hard on this. This is one of the areas that they are really honed in on and trying to get fixed, because everybody has said this wasn't the intention, that they wanted everybody to still be able to deduct those expenses. So hopefully that will get fixed. Hopefully next week we'll know the answer to that. But at a minimum, we'd really like to be able to know before we have to start filing tax returns in, February and March next year. And also just everybody needs to keep that in mind, because your tax bill may be very different depending on whether they fix this or not. All right, that is what we have. I know, Matt, there's probably, I saw several questions in there, and we'll try to get to some of those.
Yeah, I'm looking here at I think the first question I saw was very early. It says companies who received PPP funds but had no money spent in payroll expenses during the covered period and were closed due to OSHA CDC guidelines. Is there any forgiveness allowable, or does the safe harbor for non-operation during the covered period only relate to forgiveness reduction from the FTE head count?
Yeah, so you still have to spend the money on the areas that we were talking about. So yes, the executive orders only free you up from the FTE, but you still have to spend it on the 60% payroll and 40% other things, if you could go to that, correct, Matt?
That's correct. Yeah. Yeah. I'm scrolling through here. Is the $50,000 forgiveness just for loan amounts 50K and less, or does everyone get $50,000 forgiveness? And so, yeah, that is just for loans $50,000 or less. We'll be able to use that. I believe it was 3508S form, that simplified form. It says, for payroll, can we use the amounts we paid for a staffing agency? And if so, do we add those people to our employee count? Excuse me.
You know, I haven't seen an FAQ on that in a long time. Early on, I know they were allowing that, but you know, that's one of the things. There have been things that have changed, so we'll make sure. I don't, unless you know for sure, Matt.
I don't know for sure. I do believe that they still are included, like they were on the front end, but I will have to make sure and go confirm that.
Because that kind of as an example of something that changed from what we were told early on is they came out with a caveat on rent to related parties. They came back out and clarified some of that and said that if you're paying rent to a related party, you can only count the rent if a portion of that, if that rent went to cover mortgage interest. So it's kind of like a double tracing rule. But we'll definitely look and see if we see any changes to that staffing agency. But what I remember early on was that it was allowed.
Yeah.
And I think if it's allowed as a payroll cost, you would also allow the hours in your FTE. I don't think you could put it one place and not another.
Yeah. I believe we answered the one question already about paying employees. You still have to use the funds. If we are over $2 million in PPP loans, are we automatically in the long form, or is there a case that we can still use the EZ form? There's definitely still a case you can use the EZ form. If you go look at the 3508 EZ instructions, they're on the top half of the first instruction sheet, page 1. There's 3 check boxes with examples, and if you can check one of those boxes, you're going to be able to use the EZ form regardless of your PPP loan amount. I know, for instance, we're working on a few that are over 2 million, and they've had those COVID-19 restrictions by an executive order. So even though they're over in the aggregate, they still get to use the EZ forms for each entity due to the fact that they get to check one of those boxes. So as long as you can check one of those 3 boxes on the EZ instructions, you can use the EZ form regardless of your loan amount. I think, what is the current state of deductibility of expenses in 2020 where the PPP loan is not getting forgiven until 2021? Lisa, I think you talked about that already.
Yeah, it doesn't matter what year as of right now. The IRS has clarified that, and that they, like I said, they only clarified that because that's how the law, the IRS code section was already written. It had nothing to do with PPP. It just falls under tax exempt income statutes. So it will have to take a special caveat fix by Congress to throw this out of those rules. And that's what they're trying to do.
Question here. This is with leased employees, so we'll probably have to get back to this one, but a nonprofit has leased employees plus 1 true employee. With leased employees, there is no 941 available for the lease group. Luckily, the 1 employee's wages for 24 weeks covers the loan amount. Would it be best to include both documents from the leased payroll group and the second payroll group that does not have the 941, or just send the third-party documentation for the 1 employee?
Send a third party, right? Just make your life easier. If you've got enough expense there, I wouldn't go down a gray rabbit hole unless I had to, right? And that's how we're advising our clients. We're starting with payroll numbers, and if that's not enough, we'll go back and pull other things. But there's no sense in making this process harder than it needs to be if we can cover it with just payroll.
Let's see here. I think there's a question on how to calculate full-time equivalents. I'm using my memory here, but there's 2 ways to calculate that. Basically, you'll go back and look at the hours worked during specific time periods. So you'll do it during your covered period, and then you'll do it back in your look back periods, which can be from January 1st, 2020 to February 29th, 2020, or the same cover period back in 2019. The way the SBA looks at that, there's two ways. There's a simplified method, which if there's an employee, say you're working hourly and it's a weekly payroll, if they're 40 hours and under, you can use a simplified method and just give them 0.5 for each employee under 40 hours, and then 1 for any employee over 40 hours. You can come up your FTEs that way, or you can directly divide it out by the number of hours in your pay period. So if it's a week and you had 45 hours divided by 40, that's going to be 1 point something, but just realize you're capped at 1, but you can actually do those direct divisions for each employee. But you do have to do it per employee for each, basically 3 time periods if you're doing your look back periods.
And luckily, the AICPA has kind of given us a nice little spreadsheet that helps us calculate that, or helps us help you too. So keep that in mind. It can be cumbersome, but we do have access to a spreadsheet that makes it a little bit easier, let's say.
Yeah.
I see one, Matt, that says if you choose to only use payroll because you're 1,000% or 100% covered, and later it gets adjusted by the SBA, can you reapply? And the answer to that is no. You have one shot, right, to send in your things. So if you think there's, there's a chance your FTE thing would get adjusted or something's not right on it, you would want to have as much expense in the forgivable part as possible, right, Matt?
That's correct. That's correct. But just it's kind of a balancing act, because if you go and put those other expenses on there, just note that there's going to be a lot more documentation requirements for sure. So if you've got double the loan amount in your payroll, and you know for a fact you haven't reduced your employees by more than 50%, you should be good to still use payroll, just as a kind of general rule of thumb.
Yeah, because keep in mind, the application was done on 2.5 months of payroll, which is essentially, 10 weeks, right? So if you're able to use 24 weeks of payroll for your covered period, you should more than cover it, even with some staff reduction, right?
Correct. Yeah. Question here, what paperwork do I need to submit for look back periods? Basically, you're going to utilize payroll reports, whether it's from a third party or your internal payroll reports that shows, for instance, I'm just going to use one off the top of my head from QuickBooks. There's a transaction by payee. And so you can basically put in your dates and it'll show all the checks and the hours worked for each check that was given to those employees. And so you use those hours to be able to come up with your FTEs. So you would use that same thing, that same report for each look back period. And you just provide that along with your forgiveness application. If you're, go ahead. Sorry, Lisa.
I was just going to say, and just make sure you talk to your payroll provider, because I know, for instance, ADP has a really nice spreadsheet that helps summarize all that and makes your life much easier. Our internal software we use can create a report. So I think all software providers that are these third-party payroll providers, they've come up with a spreadsheet. So don't do a lot of work, because they should be able to provide you some easy reports that have done this for you, because they're getting asked this, day in, day out, and it's taken time because those reports had to be developed. But most providers, I think, have been able to give that report. I think where we're seeing it's just a little more cumbersome is if you do your payroll in-house.
Correct. A question about the spreadsheet that we're referring to, it's actually on the AICPA's website. Lisa, I think that's something we could potentially put on our website. I'll have to double check with marketing and things of that nature, but that is a way, a spreadsheet that I believe is free to access out on the AICPA's website.
Okay, yeah, sure. Well, so yeah, because I saw somebody referring to our old spreadsheet, and we created that and then and used it because there was nothing available, but we have switched over to the AICPA when as time has lapsed.
A follow-up question regarding leased employees. Would you note one employee on the 3508S or the total number of employees, including leased employees, if you only send the payroll journal for one employee?
I would probably just list the one if that's the only expenses I'm listing.
That I would agree completely on that. So AICPA, if that's what you're looking for, you can just type that into Google. It'll take you straight to their site. And there's COVID resources on there. You can look there if you're looking for that spreadsheet.
Yeah,
Questionnaire.
American Institute of Certified Public Accountants. If
Correct.
we're sorry, we talk in that jargon sometime and think everybody knows. So that's just one of those professional hazards. Sorry about that.
Question here on the 3508S, you have to list the EIDL advance received. Should this amount reduce your forgiveness amount reported on the line below it? That is correct. So any EIDL loan advanced amount, that will be a reduction to your forgiveness. There's been a lot of talk. Lisa, do you want to add something there?
Sure. You know, I actually sat on a bank board meeting and a bank program at EKU, and we had a lot of discussion about this in the last couple of weeks because this has been a real surprise to banking customers. They didn't understand that this was going to work this way. So if you did get that $10,000 advance early on, then you're going to end up owing $10,000 on your PPP. I mean, that's just really how that's been working, and that's been a little bit of a surprise to the bank and to the customers. But that is how they have the application working out. So just know if you got in advance, there's a chance you're going to have that owed when everything clears out with the SBA.
And one of the reasons for that, if you remember back to the application, there was where you had a line to put your 2.5 months worth of payroll, and then you subtracted your EIDL loan advance. So if you were able to subtract it on the front end, then it shouldn't be subtracted because you already did it on the front end on your application. But the problem with that application wasn't reworked until everyone had already applied. So that's why you're seeing a lot of these having to be subtracted. Employees who are a 1099, do they count or not? We did use them in the original calculation.
Yeah, so if you use them in your original calculation, that was incorrect. People that receive a 1099 had to go apply for their PPP on their own. So, you know, I don't know. I have not seen guidance on what to do if you got the money and you got it based on wrong numbers. I've not really seen anything on that. I would tend to tell you that if you know that now, it probably should be paid back is the correct thing to do because it was not eligible to be applied for from the get-go.
I think one of the last questions here, does the amount I report on the 3508S already reflect the reduction, or will the SBA just apply the reduction when they do the forgiveness? I know that the EIDL advance reduces the forgiveness. Just want to make sure if the amount I report on the form needs to reflect the reduction. Yeah, you should go ahead and reflect that reduction of the entire $10,000 loan advance. I have seen where someone had forgot to do that, and the SBA did reduce it on the back end and notified the lender and the borrower that, hey, there was an EIDL loan advance, and they reduced it by 10 grand. It came to a surprise to the borrower because they didn't realize that was how it was going to work. But yeah, go ahead and reduce that on your application. Lisa, I think that's about it. Anything you want to close up with?
No, appreciate everybody joining us today. And if you have other questions, as we've done for 8 months at this point, feel free to email us, and we'll get these questions posted out like we've done in the past. If you need help with your application, just reach out to Matt or I, and we'll get you in the list. And if you just have a question and feel comfortable doing it yourself, that's fine to call us with that too. We've done both ways. And some people just kind of thrown their hands up and said, please handle it. And, you know, another thing I would mention, again, we've been saying this for 8 months, every bank is different. So their portal process is different. And the bulk of what we've said is all the same, but different banks are kind of asking for some different things, and I think that'll all get vetted out eventually. But you're kind of at the mercy of your lender of what they might want. And again, just don't let the lender rush you too much. That's the one thing I would say. I mean, we've had to say, you know, we can only go so fast. We're trying to get through them as fast as we can, and I know the lenders are pushing, but you know, we're kind of all in this together, and our goal is, like I said, to get them done by mid-January, but we still have plenty of time based on that 10-month deadline.
One thing I noticed, well, I have seen a lot of clients actually receive letters from the lenders saying their first payment was due. So if you do have that scenario, just remind the lenders to go back and look at the FAQs of when they extended that to the end of the covered period. You don't have to make your first payment until you actually, either the 10 months after your covered period, or once you get your forgiveness back in whether they've approved it or denied it, that nature. So I've seen a couple of those that all you have to do is they've gone out accidentally. The 2 times I've had to call the lender, they accidentally went out and they accidentally didn't update internally that new date of when the payments start. So just wanted to note that as well.
And I'll just throw out there, if next Friday PPP2 is released, we'll get our heads together and get a webinar together as soon as possible to get everybody ready to go for that as well, if it's applicable. All right, I think that's probably it. We did fill our hour, Matt. We're not sure. So appreciate everybody. Have a great weekend and hope everybody is staying safe and healthy. And any questions, just reach out.
Take care, everyone.
Thank you.